This is a fair value gap. And I have to be careful when I'm talking because I noticed in the 13th live stream, when I was referring to certain things, my cursor wasn't really where I wanted it to be when I was making points. So I'm trying to make a conscious note of making sure I have my cursor where I want to talk about it. So where I have my cursor now, that candle's high and the specific close is what I'm looking at for that range to that candle's low. Okay, the candle to the left of this one here, that body of that candle that is encapsulated between the range of this candle's low here, that makes the high of the fair value gap. This candle's high or close, and I just dropped it there. It's so close it doesn't make a difference. That candle's high and or closing point represents the low of the fair value gap. The shaded area is highlighting this particular candle's body, not the entire body of the candle, just the range that's being shaded here. Okay, between those two reference points, that is considered, by my definition, I call it a fair value gap. Its classification is a buy side imbalance, sell side inefficiency, meaning that the delivery of price was on the upside. So think about a paint roller. Okay, and I've used this analogy before. If you wanted to paint a wall in your home and you apply the paint to the roller and then you apply that roller to the wall, okay, you're getting that delivery up. If you keep doing that from the bottom of the wall to the top, eventually paint will run out and you'll see these little pockets, these little pits on the wall where paint didn't make its way to the wall. So you already know, what do you have to do? You got to roll back down over top of that to fill in those little pockets of gaps where paint was not distributed. Think about price the same way. Between these two reference points, that being this candle's high and this candle's low, that one candle right here in that shaded area that's purple, there's going to be small inefficiencies in that range that's shaded in purple. The easiest way to simplify it is we don't need to know yet where those small little pockets are on the lower time frame because this is a weekly candlestick. So inside that range I'm highlighting here with my cursor, somewhere along the line in that very week of data, there are gaps, inefficiencies. We don't need to know exactly where they are, but we can identify that range right here as soon as that candle closes and we begin a new week. That gap that's shaded in purple, we know that there's a likelihood that the market will want to, at some future time, want to reprice to that. That is not balanced. All it means is that shaded area that's purple, it's buy side imbalance. So the market's shown an imbalance, meaning it wants to go up. It did go up. So what is it inefficient? It's inefficient in the sense that it hasn't had a sell side delivery. Sell side is when price is being offered downward, a down close candle. My down close candles are black. My up close candles or bullish candles are green. For that purple shaded area here, for that to be repriced to and offset the inefficiency of sell side, because it's buy side imbalance, it's imbalanced. It has to be balanced later on, and I'll tell you how it becomes balanced. But right now, what is it lacking? It's lacking sell side delivery. That means a candle must trade down in between the high and low of that purple range. And it's defined by the two candles I mentioned here. This candle's high. That candle's low. So in my mind as an analyst, I'm looking at this and thinking, okay, Well, we've seen a lot of back and forth price action all through here. Let me add a rectangle here to kind of like highlight, because I know I may or may not have my cursor exactly where I want it as I'm talking because of the live stream. Okay, so inside that darker shaded pink area, inside that rectangle, notice how there was a lot of back and forth, up and down price delivery. You see how it's created like a small little trading range in there? Where is there a break in all of that back and forth movement? It's in that shaded purple area here. So up and down, back and forth, think about that paint analogy, all inside this pink area. If price was paint and the canvas that is the background of my chart is the wall, in that shaded area, price has done a very good job of moving back and forth inside that pink shaded area. But it didn't do a very good job of efficiently offering sell side delivery in that little area right there. So what the algorithm does, it seeks those areas there because it's easily defined by arrays, old highs and lows that are separated across a spectrum of 3 24-hour periods.